Stocks booming, oil is falling. So what's wrong with Jay Powell? Joining us now is Mr. Steve Miran, chair of the Council of Economic Advisors. Steve, good to see you. I'm just going to read you. This is Nick Timiraeus of the Wall Street Journal, his opening graph. Federal Reserve Chair Jerome Powell told lawmakers Tuesday that recent economic data would have likely justified continuing to lower interest rates if not for concerns that higher tariffs might derail the central bank's years-long fight to defeat inflation. First of all, in your judgment, should the Fed be targeting tariffs? I thought their mission was to target inflation.
Yeah, I think you're completely right. Their mission is to target inflation and also the labor market. And both of those are indicative of an economy that's normalized. And so one would think that eventually interest rates would normalize too. Now, inflation in particular has been running at a 1.5 percentage point annualized rate since the president took office. The president's surprised to the downside on inflation. Inflation beats less inflation than expected every single month the last few months.
So I want to, go back to this. I mean, Powell blithely gives these goofy anecdotes about tariffs causing higher inflation. But I know lots of distinguished academics and others, including amateurs like myself, who do not think tariffs necessarily cause higher inflation, or maybe some prices go up and other prices go down. Now, you studied under Marty Feldstein at Harvard, got your PhD. Do you think that tariffs necessarily cause inflation? Do you think the Federal Reserve should base its policy on something as iffy as that?
Yeah, look, I think you're completely right, Larry. I mean, we ran this experiment in 2018, 2019, in the president's first term, when the president took historic steps to put tariffs on China, for the first time in a long time. And there was zero evidence of macroeconomically significant inflation then, zero evidence whatsoever. And we're repeating the same experiment now. And guess what? If you look at the data since we started doing tariffs, and by the way, the president started doing tariffs on the first day of his second term, there's again zero evidence of any material inflation as a result. So there's just nothing to be seen there.
Yeah, so I didn't understand it. The other thing is, of course, with the great success of our military and our presidential diplomacy, such as it is, you got oil prices falling worldwide. Crude oil is falling in West Texas. Brent crude is falling. That's the European crude. Falling quite a bit, I might add, approaching $60 a barrel. Who knows where it'll land? Now, Steve Miran, that's got to be counterinflationary. Home prices are coming down. That's got to be counterinflationary. I mean, I just don't understand why the Fed doesn't open its eyes.
Yeah, no, I mean, you're completely right. You're right again, Larry. I mean, oil prices coming down is extraordinarily disinflationary, so powerfully disinflationary. And home prices, easier conditions there. What we're seeing is that the stage is being set for a much lower sustainable inflation rate. Don't forget that it's the Trump administration policy to push out the supply side of the economy by tax reform, tax relief, giving companies incentives to invest more, to produce more capital stock, giving workers incentives to work more, deregulation, cutting red tape, energy abundance. All this stuff pushes out the supply side of the economy. And we all know that when supply goes up, prices go down.
Now, I notice, let's see, Mickey Bowman, the new vice chair for supervision, and Chris Waller, member of the Federal Reserve Board also, they are leaving the Fed's groupthink, as I call it, groupthink or group speak, and they're coming out and saying, how about lower rates in July? So what do you make of that?
Look, I mean, I think that the Fed tends to move, historically one person at a time until the center of gravity moves, and I'm optimistic that the Fed will see in the coming months that the economy has normalized, that inflation is nowhere to be seen, that the labor market is in an okay position, and if that's the case, then it's time for policies to normalize too. So, I want to be clear. I don't tell the Fed what to do, but I do think that if you look at the economy, things are looking pretty normalized.
You'd make a good Fed governor. You want to go on the board of governors of the Federal Reserve, Steve Miran? You get a little tired in the White House and go over to the Federal Reserve. Somebody's got to straighten that out. They need some perestroika, that whole crowd. I know you can't comment directly on it, but I can comment directly on it. They need some perestroika. Steve Miran, in the last minute or so, when are we going to get an announcement of the next trade deal?
Well, I'm hopeful that we'll get a flurry of frameworks in the next couple of weeks. The way that these negotiations have been proceeding is they've all been going through certain stages, certain processes. And so I think what we'll see in the next couple of weeks leading up to the July 9th deadline is a flurry of framework announcements. But I think I want to emphasize, just as with Iran, just as with Israel and Iran, the president is one of the best negotiators in history. He's negotiated hundreds of deals over his career, pulled rabbits out of hats where nobody thought was possible, whether it's deals with Congress, international trade deals, international peace deals as well. And I think we'll be surprised again that the president is able to pull a large number of frameworks out of a hat. We'll see if other countries are going to make the concessions required to do so.
All right, we'll come back to you on that one. Steve Miran, head of the Council of Economic Advisory. Appreciate it very, very much.